Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over market conditions and ratios, see what's going on there. I'll touch on it, let you guys know my financial opinion, and we'll dive right in. So what I've got up behind me is the CRB to S&P 500. We have been coming on up. We've broken the downtrend, and it's been favorable for commodities. Now, we've been on a tear. It's been going up quite well. We're starting to get some wicks at the top, which means we're slowing down, and we could turn and have basically our first larger pullback as a possibility. When we look at the dailies, you can see the past 1, 2, 3, 4, 5, 6. The past 6 days, we've been selling off. It doesn't mean that it'll continue, but we've had some selling pressure here over the past week or so. So again, I'm not doing anything different. I'm holding on to my shares. But you can see here, if I just throw in kind of a quick trend line, that we could be breaking this trend line here at any second. But we'll see if it holds first. And we're seeing some softness in the commodities market recently. Not like anyone hasn't noticed. Looking at platinum to gold ratio, platinum has pulled on back. We're still in the 0.5 area. 0.5 is incredibly cheap for platinum on a historical basis. This is what it looks like on the big picture, the descending wedge, the breakout, and then we're still pulling back sideways on the ratio at a very cheap level. 0.5 is historically a very cheap ratio, and usually we trade at about, the average is about 1.2. So the average is 1.2, and a higher ratio is above 2. And there's been in times in history that it's been 3 or 4, depending on currencies and market conditions. Platinum to palladium. We've had a nice break of this downtrend here, and we've had a small little down movement recently. There's the little down movement, but we've broken out of this downtrend. We've been moving higher against palladium. I think that platinum will outperform palladium, that there will be substitutions occurring, and the ratio is at 0.48. 0.48, again, is at an incredibly low valuation for platinum. Platinum is cheap. Historically, we've gone all the way to 5.5. So that could be over a 10x to the upside. You could increase your wealth over 10 times against palladium if platinum were to get to that ratio again. And then platinum to silver, we are still banging our heads against this trend line. We tried breaking out. We got a little bit of a pullback. Zooming in on it, you can see us playing with this trend line back and forth. Again, this is a very cheap ratio for platinum. Platinum at its more towards its top is at 150. So 1 ounce of platinum can buy 150 ounces of silver. We are now at around 43. The gold to silver ratio continues to slowly move higher. We'll zoom in on this. You can see we've got this. I think this is probably going to head lower at some point. In a commodity bull market, silver usually does well, but it's just delayed behind all the other metals. Platinum usually takes off first, and then silver does very well towards the end, and it just explodes higher very quickly. It's a very volatile move usually. But short term, we got a little bit of weakness here. Almost could be a double top, and we'll see if it comes on down. Palladium to silver ratio. We've been moving higher in it, where palladium's been outperforming silver. And we are still at what I would consider to be kind of an average-ish, slightly expensive ratio for palladium. Anything down in this region down here, palladium's incredibly cheap at the bottom here. Silver's cheap when it's up top. So silver up here would be a good buy. Silver up here would be a good buy. And I think this will eventually work its way lower, meaning that silver will outperform palladium with time. We've got the Dow Jones Industrial Average to gold, the Dow to gold ratio. And this ratio here, you can zoom in, has been moving up inside of this megaphone pattern. It's been bouncing back and forth. I do think this will eventually work its way lower in a commodity bull market. So this is when you want to be invested in gold. This is when you want to be invested in gold. And then this is when you want to be invested in gold, is that whole period on the right-hand side. Whenever it's going down, gold is outperforming the Dow Jones. When it's going up and you're cheap down here, this is when you want to buy stocks like you've never bought before. They are super cheap down there. And then you ride it on up. That is the best time to be holding stocks, is during that move. And that's where the most amount of wealth is created, holding these and getting this big picture right. So I still think that we have conditions that will fall down, compressing this ratio where gold is favorable. Looking at the gold to oil ratio, we're at 16.75. 1 to 15 is the average ratio throughout time. And if we zoom in here, you can see this thing's bouncing back and forth. Maybe we come up and do a retest and then go lower. I do think that this will go lower. I don't necessarily know the path, but I think we have an energy crisis and oil is going to outpace gold in the beginning and middle, and maybe even up till the end of this commodity bull market. Energy always does very well in energy crisis. So I should say oil always does very well in an energy crisis. We've got copper to gold ratio. This has been falling. The copper to gold ratio means that the economy is getting a little bit weaker and that people are more worried about a potential recession. And this ratio is telling us that this could potentially go lower, which it is, saying that we could have a problem in the markets. So getting a little bit more cash, some people view this and they say, okay, I'm going to save a little more cash or put a little bit more money into cash as they get more afraid. And the only thing I'll say about this is, if you see this going lower and it's paired with a move that lower with the 10-year yield, then I think we have to worry if this just drops out and really heads quickly lower. We saw that move here in 08, where we came up, we were doing a double top, we came sideways, and this was the crash. Are we going to have another crash? Tough to say. This was the crash here. And I think we might have already had the crash. It might already all be priced in already. And that's what's difficult when you've got we're kind of midway in this boom. And I'll describe that in a little bit. Uranium to silver ratio looks favorable for uranium. It's very cheap, and we could break higher. Uranium to S&P 500 looks very cheap. We could break higher. We're right on support. We have uranium to, I think that's gold. Yeah, uranium to gold. We've broken the first level here. Now we're just coming back doing a retest, and then hopefully we can keep breaking higher. But we are very cheap against gold. Uranium is. Then we've got, I think this is uranium to crude oil. It's very cheap for uranium. And it looks like it's trying to bottom out for uranium. So it's positive uranium. And then uranium to copper. Uranium's outperforming copper. It's starting to come higher. Hopefully we can get that to move on up. But that's looking good for a move higher. And then the Baltic Dry Index against gold. We've been chopping sideways. We broke out, came back. We're still chopping sideways for the Baltic Dry Index. Still very cheap, though. Still very cheap. And then looking at just to talk about something here, I'm going to go to the housing starts. There they are, Fred Housing. And we're zoomed in here on this. So I'm going to go back here. The 10-year yield, when we have like a deflationary type crash, the 10-year yield will just fall out. What that means is that money runs into bonds and the yields drop. This was from 2018. You can see this thing coming on down, and this was the crash of 2020. People were running into bonds for that crash. Now, that also paired decently well with the copper to gold ratio was falling as well, but it was already at a pretty cheap level. Coming on up, this is an inflationary period that they're trying to slow down inflation. People are selling bonds and the yields are going higher. We hit this resistance level and we've got a little wick at the top. So we've pulled back a little bit. We're basically doing a retest. This is what it looks like. We've pulled on back and we're doing a retest. So I think what's happening is that we are more than likely, by looking at this data, we have inflation and inflation's a problem, but the economy is slowing down at the same time. So really, it's an inflationary slowdown or a stagflation is what this data is telling me is going on. So I think that certain commodities can do very well, and I think other commodities may have some pressure. Base metals, I don't think will do as well in a recession that's inflationary. I think precious metals and energy, I think will do well. So that's where I've positioned the majority of my money, is in those areas. Again, that's not advice. That's just me telling you how I'm positioning. But that's what I've got for today, guys. If you guys like the content, give me a thumbs up. Subscribe to the channel. Subscribe to the website, Platinum membership in the description link below if you're interested in learning more about all of this information. I have it on the website. I got a lot of information up there, and I will continue to add more and more to it. And it's an easy way to navigate and find all of the information on the website. All right, guys. We'll catch you later. This is Finding Value.